Hello world, welcome to Sage Hub. Today we'll be looking at how to invest in stocks for beginners. Make sure you like this video, hit the subscribe button and turn on the notification bell to get updated. Investing in stocks has become increasingly accessible, with beginners able to open an account with little money through a brokerage's website or mobile app. Stock represents an ownership stake in a company as a common shareholder. Common stocks allow shareholders to vote on company issues, with most companies granting one vote per share. Some companies also offer stockholders dividend payouts, giving investors a stream of income on top of the market value of the stock. These payouts typically change based on the company's profitability. Stocks are considered a risk asset that can provide growth and income to an investment portfolio. This means it's an asset class that carries a high degree of price volatility. With stocks, beginner investors must consider the degree of risk that they can take. Typically, the more risk in an investment, the greater the potential reward. But you need to be willing to take the risk of losing money in case high returns don't come. History shows that stocks have been a reliable asset class for strong annual average returns over time. Stocks took a dive in 2022 as the highest inflation in 40 years has driven steep interest rate increases and stoked fears of an economic downturn. The gloom has ensnared some of the market's biggest names, particularly tech stocks, which have been pummeled. Facebook parent Meta Platforms Incorporated, ticker Meta, is down 50% from this time last year. Microsoft Corporation, MSFT, has dropped 16.5%, and while Apple Incorporated, Apple, stock is only down a comparatively light 9.3%, it had the bumpiest ride of them all last year. But one need only glance at the market performance in 2021 for evidence of how quickly things can change in the stock market. The S&P 500, an index of some of the biggest U.S. stocks, climbed 27%, driven by gains in some of the very same companies recording steep losses last year, including Meta Platforms, Apple, Microsoft and Alphabet Incorporated, Google. If you had invested in these companies or the index as a whole through an index fund, your investments would have increased in value considerably in 2021. Despite a rocky 2022, many stocks appear to be on the rebound thus far in 2023, so there is hope for a stronger year ahead. If you're a beginning investor, the best time to enter the market is when stocks prices are down. Here's what else you need to know about investing in stocks. 1. Where to start investing in stocks. The first step is for you to open a brokerage account. You need this account to access investments in the stock market. You can open a brokerage account for free online through many of the major brokerage firms, including Fidelity, Vanguard and Charles Schwab. The next step is to fund your brokerage account by transferring money from your bank account to fill trades of stocks you want to buy. The amount of money you choose to invest is a highly personal decision that depends on a number of factors, says Ryan Burke, General Manager of Invested M1 Finance. For instance, how much money you can afford to save, your near and long-term financial goals and your risk tolerance, or how much you're comfortable potentially losing. Remember that while, over time, the stock market typically increases in value, there can be short-term market fluctuations, which can put your money at risk. A common adage is to save and invest as much as possible to maximize time in the market and potential upside appreciation, Burke says. But this comes with a caveat: if you have high interest debt, paying that down first may be a better financial move. 2. How much money should you start investing in the stock market? Several online brokers such as Betterment don't charge fees for a $0 account balance, nor do they require a minimum amount to open a trading account. You can start investing through these brokerages with any amount. Some also offer fractional shares, meaning you don't have to buy an entire share of a company if you can afford it. Discount brokers are a boon for beginners with little money who are often looking to get stock market exposure with smaller portfolios. But a discount broker typically does not provide advice or analysis. Many of these brokers don't require a minimum amount to start an account, while some have a low beginning threshold of $1,000. 3. How to choose which investments to make. Daniel Beckerman, president of Beckerman Institutional in Ocean Grove, New Jersey, says that by looking at a company's metrics, you can gain insight into how companies and industries are performing. For example, when price-earnings or price-sales ratios are elevated, we can get some sense as to when certain stocks or industries are priced in bubble territory, he says. This was the case in 2021, when many unprofitable technology stocks were trading in what I would think of as overvalued territory. Valuation is an important factor when stock picking. Company profitability, earnings growth prospects, quality of management and industry performance are some factors investors must consider when evaluating a stock's worth to determine whether it is undervalued or overvalued. Stock valuations, Beckerman says, provide investors with some color around the sentiment regarding various industry groups. A stock's price can be different from its intrinsic value. To know how to value a stock, investors must dig into the company's financial reporting history, understand the company's role in its industry and how it fares among its competitors, as well as other factors. 4. Have an investing strategy, especially during market volatility. It is normal for the stock market to experience bouts of volatility. During those periods, stocks, even ones considered relatively safe, experience price fluctuations. This can happen when there is uncertainty in the markets, and it tends to be short-lived. Over the long run, we have seen a 10% or greater downturn in the stock market more frequently than once every 2 years. On average, Beckerman says, you should prepare to stay the course during these rough periods, such as the one experienced in 2022. Beckerman says, if you expect to do well throughout your investment time horizon, volatility can certainly be concerning, especially if you are a beginner who hasn't experienced it before. That said, you should put your money in companies that can generate growing revenue and profit over a long period. That way, you have confidence in the company despite the stock's price swings. We consider a company's ability to fend off competition. Beckerman says, if a company is hard to compete with, they will be less likely to run into trouble with falling revenue and profits in the future. They are also more likely to be in a position to be able to raise their prices in an